Hey guys, Akil Stokes here, back with another video for you, a little midweek technical analysis. We're going to be looking at the dollar yen today. We're going to start off by talking a little bit about fundamentals because we're in a very interesting place with the market right now. We just had CPI news come out this morning for the dollar, which is why we're seeing a pretty significant bearish movement today. But we've also had news come out for the yen, right? Historically, the yen has come out and said that, hey, we're going to keep interest rates low. We're not going to move off of that. And they're starting to have a really kind of a change of heart, perhaps. And we may see some difference in decision making come the end of the month. So we're at this interesting point in the market where we may be seeing a shift in the balance between dollar strength as we look to do perhaps one more interest rate hike before maybe going into a cutting cycle. And we have the yen where we're starting to see an recent historically kind of weak yen start to get a little bit stronger. So we may have that balance shift from dollar strength and yen weakness to yen strength and dollar weakness. And if we are going to see that, we should see a continuation to the downside. And this is something we were looking at this morning in the live trading room. Excuse me, I gotta mute my phone, getting pinged all over the place here. But currently, price action is trading at a previous level of structure and a pretty important level of structure. If we just look at what price action has recently done. Obviously, we're coming into previous structure support right here, but on the other side of that, we have a nice little resistance shelf right there, and right there. Now, if you're new to technical analysis, you have to understand that things work in zones. So it's never going to be kind of exactly on a specific number or something like that, but in kind of a range and kind of like a loose bubble. And this is going to be a key decision point in the market because if we can break and close below this level, it allows us to make a prediction, right? We identify a lower low, lower close, a violation of structure. It allows us to then predict that we're likely to continue lower. And if we are likely to continue lower, there's a pretty good move to the downside that's available for us. Now, first and foremost, there are two ways to continue lower here. And this kind of follows up what I said in the YouTube video this past week, where we spoke about many traders, actually a podcast episode where it was titled, I think it was What's More Important, Price or Patterns? And we spoke about how a lot of newer traders just understand the specific pattern, meaning I know that this is this, I know that this is that, right? Where seasoned veterans and more experienced traders tend to understand price more. And they kind of go hand in hand because obviously price action is what makes up patterns. But the point of the discussion that I made in the podcast episode is that the difference between just understanding price and understanding patterns is that if you understand patterns, you only understand one specific thing. And if that specific thing doesn't occur, you don't know how to take advantage of the market, or you think that there's no way to take advantage of the market. If you understand price, it kind of gives you the best of both worlds because yes, you can understand how to identify and evaluate specific pattern formations, but you can also identify key levels. So even if those patterns don't occur, you can still be dangerous in the market. And I'll show you what I mean. What we're setting up here, right, along with kind of the reversal and fundamental kind of bias of these pairs, is a classic reversal pattern called a head and shoulders, where price gave us a directional move. We then retraced down here. We then put in an extension up. Usually you want to see this extension be a little bit shorter than the previous one. And then we see a move, a deep retracement, which is a sign of a weakening trend, back to our neckline, a little false or failed extension higher, and then ultimately a move lower. Now, this is a classic reversal pattern. When you see this, specifically the violation of this neckline, it is a good sign that price is likely to continue lower. But fact of the matter is, we can make the same assumption even if this head and shoulders doesn't exist, right? What's important is not necessarily this head and shoulders, not saying it's pointless. It gives us powerful information, but what's more important is being able to identify this level. And regardless of if the head and shoulder comes or not, a violation of this level still allows us to make that prediction lower. So the next question is, if we are going to go lower, where are we likely to go lower to? And just from a pure structure perspective, the level that stands out to me is going to be this zone right in here. And then what we want to do is we want to pinpoint the specifics of that level. So what can I use to identify where inside this level I should look for targets? Because we have a few things, right? This level has a range from 135.55 all the way down to about 133.55. So it's about a 200 pip range, which makes it kind of hard to pick targets. So I want to do a few things here, right? I want to bring in some tools. I'm going to start with my Fibonacci extension tool. I'm going to invert it from the swing high to swing low since we don't have a current extension yet to draw it from. So I'll go swing high to swing low backwards, right to left, and then back up. You're going to see I have the 1618 Fibonacci extension right in that level, 134.42. I'm also going to take my Fibonacci retracement tool, drag it from this swing low to this swing high right here. And you're going to see a 618 Fibonacci lining up at that level as well. So we have the golden mean and the inverse golden mean, right? The two most powerful Fibonacci levels out there lining up in that same level. Lastly, I'm going to take my volume profile, right? A lot of you guys have been asking about this pattern or this indicator, right? It's fixed range volume profile. I did about a 2-year study on volume, and at the end of the day, came out very knowledgeable, but kind of closer to my original opinion of it is useful, but maybe not as useful in the Forex market on specific time frames as it is in other markets. But one thing that I did get out of it was the use of a volume profile, which really works with my style of trading because I'm a support and resistance trader at heart, supply and demand trader at heart. And what the volume profile does is instead of giving me volume on specific candles, it gives me volume interest on specific price points in the market. So horizontal ranges, which is pretty cool. Anyway, I'm going to take that tool. I'm going to drag it from my swing low to the swing high. So this last kind of move up. And we're going to see that the highest volume spike, which I didn't actually expect to be here. We had some big surprises in the live room this morning where I thought it would be somewhere else. I thought we'd see a spike here, but maybe not as much. But the biggest spike is actually to come dead smack at this level. So we have a high volume spike. We have a 1618 Fibonacci inversion. We have a 618 Fibonacci retracement. We have a 134 even handle psychological number. This makes for a perfect place to look for targets if we end up getting that bearish move. So I know this is a little bit early, but I wanted to get it to your opinion now, just in case I forget. Let me know what you think. Do me a favor, hit that like button if you enjoyed the video, if you enjoyed the analysis. And as always, if you have any questions or comments, feel free to leave them below. They can be specifically to this trading idea, or a lot of the ideas for the Trading Coach podcast come from comments that you guys leave under videos and posts. So if you have a specific question or idea that, hey, you want to hear a podcast episode about, shoot that down here as well. Also, of course, share your idea, right? I love seeing all the different ideas here on TradingView. I love the conversation that it stems. So keep shooting those ideas into the chat below. That way we can talk about it. I think, especially for newer traders, seeing different opinions allows you to grow as a trader versus seeing the same opinion each time. So it's cool to get different takes on the market or just see different ways to evaluate the same take, whatever it may be. Anyway, enjoy your day. I'll see you next video. And until next time, plan your trade, trade your plan. Take care.